I took 25 trades in December. I won 21 and lost just 4 trades trading this model. Those of you on my Telegram channel, you already know what I'm talking about. And if you are not on the channel yet and you want to verify this information, you can click on the link on my profile, go to the Telegram channel, scroll up a bit to my December trades, and you're going to see all of this information I just gave out, right? I didn't actively trade in January because of the low liquidity in the market, right? So, and also I'll be dropping trades, free trades from next week. So if you want to, take my trades, you can join the channel and enjoy the free trades while it lasts, all right? So today I'll be talking about these models, right? In my last video, I spoke extensively about this basic market structure, and I also did justice to this model one. So if you haven't seen that video, I would advise you go watch it right away so you have a perfect understanding of these two models, all right? So the basic market structure, I said, price will always create higher highs, higher lows, higher highs, higher lows, and all that. And these so I'm just going to break this model down, just a recap of what we did last in the last video. And my focus today will be on this model two, right? And I'll be showing you guys as well chart examples and also the rules that govern this particular model, right? So when you apply the rule, it's very, very simple. All you need to do is write down the rules whenever you go to your chart and you want to pick and you want to, select a valid model tool. You just follow the rules and trade profitably, all right? So guys, if you're new to the channel, it's a pleasure to meet you here. It's a pleasure to have you here. Please kindly go ahead and click on the subscribe button and also click on the like button as well to help this channel grow, all right? So thank you for subscribing. So let me just quickly show you guys how this model one works, right? So let's say we have price moving this way, right? Let's say a downtrend, for example, and then all of a sudden we get a change of character, right? And the price decides to retrace and then move up, right? To give us another BOS, right? This is a normal occurrence in the market, right? Until now, nothing is extraordinary about the structure yet, right? Because what we just had here is this is our change of character, right? If you agree with me, this is a change of character. Why? Because price was expected to, create a new low here to continue the trend, but instead price went and took this lower high that was responsible for this last lower low, right? For this last lower low. So that's why we refer to this now as a change of character. And afterwards, price decided to what? To give us a breakup structure again to further confirms that price indeed wants to keep moving in this direction, right? So when this happens, we say this zone then becomes our what? Here is our sweep of liquidity. That's where I put a dollar sign here. And this zone becomes our what? Our B, right? It becomes our liquidity. So we're just going to label it as our B, right? And then we're going to label this zone as our A, right? It is this A that swept this liquidity. It is this A that took out this liquidity. So we refer to this, our A, as a protected low. That's the name for it, a protected low. If it's a bearish scenario, we call it a protected high, right? So this is a protected low, it's a protected high. Now, why is it protected low? It is being protected, this low is being shielded by this B right here, right? And it already took liquidity from this person. So this low ought to be protected. So what is our anticipation? That price is going to come back here. So we're going to go ahead, place our buy position here, right? And then we expect price to come back right into this zone and just take it out, right? Sorry about that. Just expect price to come here and do something like this, right? And then boom to the upside, right? Giving us a very good trade. So that would be our anticipation, right? So now over to this this second model, right? Now, if you look closely, these two models actually look similar, right? But there are different models. So I'm going to show you guys how this model is formed, and we are going to head to the chart to look for examples, right? So let's say we have okay, I use a bearish scenario here. Let's use a bearish. Okay, here is bullish to bearish. So let's use bearish to maybe bullish or something. Or let's use just bearish, right? Let's use bearish. So let's say you have something like this. You have this, you have a price, downtrending, and all of a sudden, sorry about that. Let me start again. Let's say you have price was buying actually. Let's say price was buying, right? And then you get a new break of structure, right? To just continue the trend, and all of a sudden something happens, right? And then this happens, and then boom, right? This does something like this. Now just pay attention to this. I'm going to explain, right? Initially, price was buying, right? So this was what, as at the time where price was buying, this zone was referred to as our break of structure, right? But then something happened here, right? Price took out this low here. Price took out this higher low that created a new higher high. So at this zone, we call this zone what? A change of character, right? So this zone is a change of character, right? So that means this zone is no longer our APOS, right? We now refer to this zone as our sweep of liquidity, right? So we're just going to put our dollar sign here, right? Put our dollar sign there, and then automatically this zone becomes our what? Our A. Now, are we sure that this zone is our A? Yes. Why? Because it is protected by what? By a B, right? It is being shielded by a B, by a liquidity here, right? So we have our A, our B, and our C. Now, the difference between this A and this model 1 and model 2 is that for the model 1, our B was formed before this break of structure, right? After the change of character, our B was formed after change of character before we have our B. But in this scenario, we already have our B before the change of character. So that's the major difference between these two, right? Our B formed after change of character. Here, our B formed before the change of character, right? So let's head to our chart to see if we can um, catch, few trades, right? Okay, I've seen a beautiful trade here already. So let me just try to cut price so we have a proper, okay, let me cut price here. Okay, just look at this. Just look at this. Remember, we say our aim was always, we always start with the A, right? We always start with identifying our A, and we say our aim must always sweep something, right? So there you have it. Our A swept this internal low, right? And what's the second criteria? That we are going to have our B close to our A, right? To shield our A. So there goes our B. So this is our A and this is our B, right? And then we say that okay, let's look at the rules. Let's just look at the rules. The number one rule says there must be sweep of liquidity. Yes, to have our A. Now we have the sweep of liquidity already. Number two. Okay, now sorry guys, this rule is for the model 1. This rule is for the model 1, right? So they have this, we are just going to exempt this. Sorry about that, guys. I felt this, sorry about that. So we are not going to pay attention to this third rule, right? Now, the first one says there must be sweep of liquidity. Yes. The second one says there must be BOS after sweep. This is also, we are going to take this one out as well. So don't pay attention to these two. This is for the model 1, right? So the first one said there must be sweep of liquidity. Yes, we have it. The liquidity created should be V-shaped and obvious. Yes, we have our liquidity shaped V, right? And in this scenario, in this case, now this number 5 for them be our number 3, right? The liquidity should be close to the protected high. Yes, our B is very close to our A, right? And then the number 6, which is number 4 for this model 2, says price should retrace to sweep the liquidity created. This is the liquidity created, the B, right? And remember, we already have our change of our continuation here. In this case, it's not a change of character. Why? Because it is a continuation of the trend, right? The only time you say it's a change of character is when you're switching from a downtrend. Let's say price, you're moving from a downtrend to an uptrend, right? Then price or something, then you can say it's a change of character. But when it's a sell continuation, there is nothing like change of character. You can only have just what's it called? BOS, right? So in this case, we have our BOS here to the downside, because it's a sell continuation, right? This is what I'm talking about. If this, let's say, for example, this is a sell scenario. Let's say price was actually coming down and something like this happens, right? Something like this happens, right? Then you can say, okay, this zone now is what is a change of character. Then this zone becomes our this here becomes our B and here becomes our A, right? Now we are going to refer to this zone as a change of character. But in this case, it is a cell continuation. So price just really just price did something like this, right? Price was uh price did something like this, took liquidity out, and then decided to what to create. This is what price did, right? This is what price did. Price took out this liquidity here, right? Just like how price took out this liquidity we have here as well, right? And then give us our A here, right? And then this zone becomes our B, right? And then here is what? Here is just our normal continuation of the trend, right? Our normal BOS. That's why I said we don't refer to this zone here as a change of character for a continuation of trend, right? I hope you guys get that clear now. So the next thing we want to do is, and also ensure you're following the trend. That's the last rule. Ensure you're following the trend, right? So we are going to then select our entry zone. So let's use this breaker block, for example, and then we are going to place our sell. Guys, at this point, if you haven't subscribed, please click on that subscribe button and also click on the like button as well. Everyone, please click on the like button just to help this channel grow, right? So we are family here. We all own this channel, right? So this is our our sell two now, right? So we're going to go ahead and play price and see what price is going to do. Oh no, oh, I've canceled it. Sorry about that. Let me quickly do it again. So we're going to go ahead and play price. Okay, that was fast. That was very, very fast. Okay, price already tapped into our buy position, right? Price already tapped into it. We've already been tagged in and see what happened afterwards. See the massive rejection that happened afterwards, all right? And price gave us our take profit. Price gave us our take profit. That's a beautiful trade right there. Very, very beautiful trade, right? So let's look for another example. Okay, here's another beautiful example as well. So let me just go ahead and take and clean all of these things, right? To just make it clear. So let me cut price again. Here's the example. Okay, here's it. Let me cut price again. So the first thing you want to do is what is to identify your A. How do you identify your A? By a sweep, right? So our A here actually did sweep something. Look at this. This is the high here, right? If you go to the lower time frame now, you're going to see that this is a serious high, right? So price actually took out this high already. Price swept this, and then we also have our BOS, right? You see our BOS, but before our BOS, we have our B first, right? So that means we have our A, we have our B, and we have our C, right? This is our A, B, and C, right? So what is our anticipation? That price is going to come back here to take out these B and our A here all to be protected. So that means our stop loss would then be at this zone, right? Be above this high. So we're just going to place our sell position somewhere here, a bit above the B, and then we're going to play price. And let's see what price is going to do. Beautifully, beautifully. Now, can you pay attention? Whenever price takes out our B, see the rejection that usually happens afterwards, right? In the examples we've seen so far, look at the rejection that happened afterwards and look at the massive sell that followed suit, right? So this is a highly profitable. Let's look at another pair. Now, the reason why you see that I have so many pairs here on my watch list is because these models works on every pair. They work in synthetic market, in cryptocurrency, they work with Forex. You can trade these models anywhere. So this model is actually a cheat code, right? So you can even see what price did. Price even give us another model here as well, right? Remember, after price took out this our B, right? That means price has swept liquidity. So that means automatically this zone now becomes our A, right? It means because it has swept something, right? It becomes our A. And look, price already gave us a B here, right? And we have what? A break of structure. So we are actually anticipating that price is going to come back here and give us a good trade as well, right? So you can see how easily this pattern forms. And this model 2 is actually more common in the market compared to the model 1, right? So you want to get very familiar with this model. Let's look at another pair, maybe a USD pair or something. Let's look at the USD pair. Okay, this is NZD USD. Let's look at this. Okay, now just a quick, if you're looking at this, you're going to see that we have, okay, the price was actually buying, price was buying, but then there seemed to be a breakout. Okay, 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 let me cut price. Let me cut price to this zone. Let me cut price, yeah. Now, if you look very well, you're going to see that price was actually buying until something happened, right? Until we have a change of character. Price has already taken this low out, right? It's because I cut price. That's why you're not seeing it, right? We already have, lots of, change of characters already, right? So, and since we have a change of character to the downside, we'll be looking for our model, right? So this is what? This is a sweep. We have a sweep, beautiful sweep here. And this is what? That means this becomes our A, right? And before price actually took out this low here, price gave us a B, a beautiful B, right? So that means we have our model ready, and then anywhere here can be our C, right? So that means you're going to place we're just going to mark out our zone, like this other block here. Just mark out this other block here, right? Mark out the other block, and then place our sell position here, right? And we can decide to target whichever percentage you want to target, right? Depending on your grid level. So just look at that. Let me try to increase it. 7. You see how long it took before price actually go back there. So I already know that, okay, this is a downtrend market, and that means price has high probability or even playing out from this my zone, because price has confirmed that it is actually a selling market. Let me pause this. Let me pause this and drag this here. Let me drag it over here. See how long it took price before it eventually came back to give me this trade. Because I actually took this trade for real. Like, I took this trade for real on my account, right? So this is not some gimmicks. So you can see that. You can see that. That's how many percent already? That's 1:6 already, right? That means if you risk $100, you've already gotten $600 with just this trade. If you risk $10 with this trade, you already gotten $60, right? If you risk $1,000, that's just easy $6,000, and with just this knowledge that you have, right? So guys, I hope you found value in this video. If you did, ensure you don't leave here without subscribing. Also click on the like button as well. Please practice, practice, practice. If you don't practice, you're going to forget everything you learned, right? So just head to your chat right now and start practicing. If you find it difficult, come back to the video, watch it again, and head straight to your chat, right? So see you guys in the next video. Peace.